Welcome to The Explainer. Today, we're going to cut through all those chaotic headlines. The war threats, the economic warnings, all of it. We're going to uncover a strategic guide for investors. Because the real question is, in a market that's just flooded with fear, where are the real opportunities hiding?
All right, let's just dive right in. The world is completely on edge. You've got ultimatums flying back and forth between the US and Iran over the Strait of Hormuz. This is one of the most critical arteries for global energy. The language being used is so intense, and of course, it's sending massive shockwaves through the markets.
And all of this tension, it's creating some extreme volatility. One minute, you see headlines screaming about massive attacks. The very next, you hear whispers of a peace plan mediated by Pakistan. So the market is just being yanked in two different directions at the same time, and it's leaving a lot of investors feeling totally paralyzed by the uncertainty.
But what if this chaos isn't actually new? What if it's all just following a very familiar pattern? Well, analyst José Luis Cava suggests that this entire crisis is following a predictable script, one that seasoned investors have definitely seen before. He says that, historically, when a war breaks out, it triggers this initial, really sharp drop in the market. We're talking somewhere in the neighborhood of 10 to 15%. And that's exactly the kind of drop that creates widespread panic and a lot of fear-driven selling. And right here, this is the crucial point from his analysis. That panicked drop, historically, has been a signal to buy, not to run for the hills. It's that moment when fear is at its absolute peak. And for anyone who understands the script, it's an opportunity.
Now here's what's really interesting. The data seems to back this up. We have hit peak fear. A recent survey shows that bearish, negative investor sentiment has shot up to 51%. That is way above the historical average. And according to this playbook, that level of pessimism is a classic contrarian sign that the market bottom is probably very close.
So if the war itself is just noise, kind of designed to create a predictable market dip, Cava argues that we shouldn't be so focused on the headlines. The real danger, he warns, might be lurking somewhere else entirely.
The main threat, Cava claims, isn't coming from Tehran. No, it's coming from Washington, D.C., specifically from the U.S. Federal Reserve.
So the Fed recently published this paper. You can think of it as a guide that outlines a plan to significantly shrink its massive balance sheet. Now, in simple terms, this just means pulling enormous amounts of money directly out of the financial system.
And the scale of what they're proposing, it is absolutely staggering. They're talking about a potential reduction of up to $2.1 trillion. That's trillion with a T. A move like that could have, seismic consequences for the entire global economy.
And this really shows the chain reaction perfectly. So first, the Fed sells its assets, the money people use to buy them just vanishes from the system. Then that causes bank reserves to shrink, and suddenly credit gets a lot harder to get. And the result? The entire economy could just slam on the brakes. It sounds pretty terrifying, right?
Well, Cava is deeply skeptical. He calls this whole plan completely unrealistic, a dream of nostalgia for past times. He's basically arguing the Fed is dreaming of an era that just doesn't exist anymore, an era where they could actually get away with moves like this. So why is it a dream? Because we are living in a post-COVID reality. The pandemic led to this massive explosion in global debt, both for governments and for regular people. The entire system is now fundamentally addicted to a constant flow of liquidity, just to refinance all that debt and, keep the lights on. So here's the bottom line. Pulling $2.1 trillion out of this incredibly fragile system isn't a viable policy. It's a recipe for a global financial collapse. And according to this analysis, the Fed knows this, which makes their guide feel more like a theoretical exercise than a practical threat. Okay, so if the Fed threat is just a phantom menace, what's the real story here? Well, Cava suggests we look back at the conflict itself, not as some random event, but as a pretext for the U.S. to achieve some very specific strategic goals. It's all a big geopolitical chess game.
And this table just lays out the winners of this conflict so perfectly. Let's take helium, for example. When those shipments get disrupted, it's the Asian chip manufacturers who get hurt. Meanwhile, who's the world's top helium producer? The United States. They stand to gain. And you see the same pattern with fertilizers. The disruption hurts Indian agriculture, which opens up a brand new market for American farmers.
And believe me, the benefits do not stop there. As a net exporter of oil, the U.S. profits enormously from high energy prices. American energy companies are making an absolute fortune. Then, by setting up insurance funds for ships passing through, the U.S. gains even more control over global trade flows. And all the while, its key adversary, Iran, sees its power and influence just shrink with every single passing day.
So what does all this mean for you, the investor, who's just trying to protect your capital? Well, it really comes down to learning how to separate the scary, distracting noise from the fundamental underlying signal.
The panic over the war? That was the noise. And according to this analysis, it created a buying opportunity based on a predictable script. Those terrifying headlines about the Fed's big plan? That also seems to be noise, a theoretical exercise, not a reflection of reality. The signal is the deep underlying geopolitical and economic strategy that's being played out.
And that leaves us with one final thought for you to consider. As you try to navigate these volatile markets, where do you think the true risk to your capital lies? Is it in the scary headlines that dominate the news cycle day in and day out? Or is the real risk in failing to see the strategic game being played just beneath the surface? Thanks for joining us for this explainer.